Hello and welcome back to Explain the Charts. Today is November 5th, 2025, and we are doing a deep dive analysis on Amazon, ticker symbol Amazon. The stock has been on an absolute tear, hitting new all-time highs, and there's a ton of news driving this price action. First, let's cover the recent headlines before we jump into the charts. Amazon recently reported stellar third-quarter earnings on October 30th, smashing analyst estimates with an EPS of $1.95 versus the expected $1.57. The big story was the re-acceleration of growth in their cloud computing division, Amazon Web Services, or AWS, which saw sales rise by 20% to $33 billion. CEO Andy Jassy highlighted strong demand for AI offerings, which is a key narrative in the market right now. This fantastic earnings report caused the stock to surge nearly 10% on October 31st. As if that wasn't enough, just a couple of days ago on November 3rd, it was announced that OpenAI agreed to purchase $38 billion worth of capacity from AWS for its AI workloads. This is a massive vote of confidence in Amazon's infrastructure and its positioning in the artificial intelligence arms race. This news sent the stock soaring again, pushing it to a new all-time high of $258.60. Now, with all that incredible fundamental news as a backdrop, let's switch over to the charts and see how this has translated into the price action. What do these moves look like, and where could we be headed next? Here we are looking at the daily chart for Amazon, showing all the data we have. We can see a major downtrend and sell-off earlier in the year, which found a bottom in early April around the $161 level. From that low, the stock began a steady recovery, building a solid uptrend through the summer months. Notice the period from August through late October, where the price consolidated mostly between $212 and $235. This consolidation phase built up a lot of energy before the earnings announcement. The $235 level acted as a significant resistance point during that time. Now, let's zoom in on the catalyst that broke us out of that range. This is the daily chart filtered to show the action from late October to now. Look at this massive gap up on October 31st. The stock closed around $222 on October 30th and opened the next day at over $250 after those blockbuster Q3 earnings. The volume on that day was immense, over 166 million shares, confirming the conviction behind this move. The price then pulled back slightly, but then came the OpenAI news. On November 3rd, we see another powerful gap up, with the price opening at $255 and hitting that new all-time high of $258.60. Since hitting that peak, we've seen a couple of days of pullback and consolidation, with the price currently trading around $249. This is classic price action, a massive breakout followed by a period of cooling off as the market digests the news and the new price levels. The key question now is whether this consolidation is a pause before the next leg higher or the start of a more significant pullback. To get a better sense of the short-term picture, let's switch to the 1-hour chart. Here we can more clearly see the price action following the new all-time high set on November 3rd. The stock has been in a short-term downtrend for the last 2 days, finding some buyers around the $248 level. A critical area to watch is the price gap created by the OpenAI news. The top of that gap is the October 31st close of $244.22. In technical analysis, gaps like this often act as strong support zones. A pullback to test that $244 level would not be surprising and could present a buying opportunity for bulls if it holds. Conversely, a break below that level on high volume could signal that the gap will be filled, leading to a deeper correction. The immediate resistance is the high from yesterday, around $257. A break above that could signal a retest of the all-time high at $258.60. Now, let's look at the 15-minute chart to analyze the most recent intraday action. We can see the struggle happening right now. The price is caught in a tight range, trying to establish a base after the recent sell-off. Yesterday's low around $248.66 is the immediate support level to watch. If we lose that level, the next stop could be a test of the lower $240s, near that crucial gap fill area. On the upside, we need to reclaim the $253 level to show some short-term bullish momentum. Volume has been lighter during this consolidation, which is typical. We'll want to watch for a spike in volume to confirm the direction of the next move, whether it's up or down. So, let's wrap this all up and bring it back to the daily chart for the big picture. What is the overall sentiment, and what are the key levels to watch? The long-term trend is undeniably bullish. The company's fundamental story, driven by AWS and AI, is incredibly strong, and the chart reflects that with a powerful breakout to new all-time highs on massive volume. For the bulls, the thesis is that this is the beginning of a new major uptrend. They will be looking for the price to hold above the breakout zone, specifically the support at $244. As long as we remain above that level, the path of least resistance is higher. The bearish case, primarily for the short term, is that the stock has run up too far, too fast. A pullback to fill the gap down to $244 seems plausible. A break of that level would be a red flag, potentially leading to a test of the next major support zone around the old resistance of $235. The news of insider selling is also something for bears to hang their hat on, suggesting some executives may find the current price attractive for taking profits. So let's recap the key levels. Major resistance is the all-time high at $258.60. Primary support is the top of the gap at $244. Secondary support is the old resistance area around $235. And the major long-term support is the April low around $161. Here are my unbiased predictions. I believe there is a 70% probability that Amazon will continue to consolidate between $244 and the all-time high of $258 for the next couple of weeks. This would be healthy action to build a base for the next move. This scenario is reinforced if the price holds the $248 level and the broader market remains stable. I'd place a 25% probability on a breakout above $258 in the near future. This would likely require another positive catalyst or a very strong rally in the overall tech sector. Finally, there's a small, maybe 5% chance of a failure at the $244 support level, leading to a deeper correction toward $235. This would likely be triggered by broad market weakness or some unexpected negative news for the company. Moving forward, keep an eye on overall market sentiment and any further news related to Amazon's AI initiatives or AWS growth. The next earnings report will also be a major event to look forward to. That's our analysis for Amazon today. Remember, this is not financial advice. This video is for educational and entertainment purposes only. Always do your own research and make investment decisions based on your own risk tolerance. Thanks for watching Explain the Charts, and we'll see you in the next video.